Good morning, good afternoon, good evening, wherever you are around the world. It's a big Minds and Money welcome from Melbourne, Australia, where the mining markets are an exciting space. Today's pitch battle will be a fight to the finish. Two companies going head to head with an all-star panel of international judges. My name is Richard Morrow and I'm chairman of the Melbourne Mining Club, MC of today's event. We hope to set a cracking pace for our pitch battle today. I have two companies going under the spotlight, hoping to grab a virtual prize of a notional $1 million investment from our team of expert judges. How's that for a carrot to dangle? We have a bumper international expert panel of 5 judges here to put these guys through their paces. My pleasure to introduce them. Per Wimmer is Chief Executive Officer of Wimmer Family Office. John Zadkovich is Chief Executive Officer of Kingsley, based in London. Kate Southwell is General Counsel, Parlour Investment, and she's coming to us from Zurich. Dan Hill, Vice President of Endeavour Financial in London, and of course our own homegrown Kingsley Jones, Chief Executive and Chief Investment Officer of Jevons Global in Canberra. Now, there's a virtual million hanging on today's verdict. So what are the rules? Well, it's a no holds barred contest and tons of pressure. Our pitchers will get just 3 minutes to give it their best shot to run through their assets and business models. I'll give a warning when there's a minute left for the pitch. I'll then throw to our expert panel to put the asset on the presenters and ask those punchy questions. At the end of the presentation, it's my turn to turn the blowtorch on our judges and find out what they thought about the presentation. Well, there's a virtual mill on the line here. We'll tally up the judges' decisions and declare a winner. Well, let's get straight into it. Our first presenter is Elbert Loois, is CEO of E-Tech Resources, listed on the TSX. He comes to us from Dusseldorf in Germany, and his 3 minutes starts now.
Thank you very much for that introduction, Richard, and here we go. So my name is Elbert Loois. I'm CEO of E-Tech Resources. They're focusing on their rare earth elements projects in Namibia. It's one of the simplest rare earth elements projects globally, really. We're aiming for a high value, efficiently processable and highly concentrated product with a low CO2 footprint. We have an excellent team of experts with a downstream proven record, upstream from downstream exploration, process development, downstream applications and financing. We're financed 100% with equity, 75% privately owned, 25% floated at the TSXV and the Frankfurt Stock Exchange, 2 million in cash available, and the additional 1 million would use for co-financing the next step out drilling campaign. We're tapping into a market that develops a deficit for magnet material, and NdPr is pouring into that. Not only the volume, but also the quality of the technical specs, the ex-China perspective, the transparency in the market, and the high ESG standards play a very big role. The speed of the market, of course, as well as the gap is opening. For reaching that project development, we have an excellent team of partners with a high standard, and we're looking at a very easy and close to surface geology, really, with a high TREO grade of 5% and easily processable. As you can see, the monazite can be easily gravitationally crushed, milled, concentrated, separated magnetically, and then turns up a beautiful monazite concentrate with more than 97% grade. This on the back of our bench scale test that we've already performed. So purely gravity and magnetic process, no leaching, no chemicals, higher than 65% recovery and higher than 60% TREO grade. You can see from the cross section that we have hit the target, the mineralized monazite, up to 4 times the depth of our current MRE in green, and we are open to depth and open to with that enriched deposit. So our MRE update is currently in preparation on the basis of that result, and you can see here we're starting with
1 minute left.
We're starting with that pink MRE current position. We have performed our first campaign, the blue one, in a step-out way. We have all the assay results back, and our MRE update is on the back of that. But we have also observed already our second campaign in yellow, and we're awaiting the assay results, which is the boon still upcoming for the future. So what we're doing here, we also have financed and are involved in wider exploration campaign. All of this will contribute in the following PEA, hopefully next year. And we're starting with an TCV position of $20 to $25 cents average in the last month towards this MRE update. So we're very excited about the coming months, what's to come, and to add value to this beautiful project. And I thank you very much for your attention.
Well done, Elbert. Thank you very much. Nicely done. Well, let's see what else the judges want to know about ETEC. First question comes from Wimmer, the Chief Executive Officer of Wimmer Family Office. What's your question?
Well, thank you very much for a short and sweet presentations. Maybe if you could elaborate a little bit about the metal composition between the heavy rare earths component and or light rare earths, if we should say. Obviously, there's a big value discrepancy between the two, and also further a little bit of timeline ahead in terms of drilling plan and roadmap to the next sets of studies, obviously heading towards PFS eventually.
Surely, thank you very much for those questions. So as to the distribution of the rare earths, we have about 70 to 80% NdPr magnet material in our rare earth basket. In the concentrate, as tested, about 100 ppm of dysprosium oxide as well. So most of the value lays in this project with the NdPr. I think about 60% with the current pricing of the basket lays with the NdPr material. As to the development of the project, we have absorbed 2 campaigns now, about 15,000 meters of combined RC and drilling material. We are planning the further campaign right now. On the back of our MRE update, we'll first collect a new capital with a new financing round. Then we target approximately another 15,000 meters to be absorbed, hopefully until the end of the year, to enter then the pre-economic assessment phase and to announce the start of our PFS, pre-feasibility study. So we're working with a very high pace. All the capital is spent well, 75% on the ground, in the ground, so to say. Yeah, we're hoping and we're expecting very good results from this one, which is also supported by the recommendation of SRK, Competent Person Report of the 2021. Yeah, we're going full speed and we're going well ahead.
Well done. Kate Southwell from Parla Investments in Zurich. What more would you like to know about ETEC? Just on mute there.
Thank you, Richard, and thank you, Elbert, for that presentation. You talked a little bit about your high ESG standards. I don't think I've seen a project recently that doesn't claim to have high ESG standards. Do you mind giving us a little bit more substance? Which standards are you applying? And you also talked about your low CO2 footprint of your operations. I'd like to hear a little bit more about the substance behind that. Thank you.
Thank you very much for that question, Kate. Actually, this project was selected in this early phase by looking at the ESG footprint. It's a carbonatite deposit, very close to the surface, easily separatable from its host lithology, so it means a very low energy footprint. Also very few water in a pure gravitational process, no leaching, no chemicals. Very close to the infrastructure, very close to Walvis Bay for further transport. We have an excellent sustainability strategy. We're guided by a sustainability advisory board that we installed with ESG experts around the world, focused on critical raw materials. So in terms of as well ESG as our cost profile, we are, and those two are actually combined in terms of energy means and a chemical substance use. We are very, very good. We also have a very low radioactivity profile. Normally with rare earths, monazite radioactivity is connected, but we have no uranium at all and a very low thorium profile of only 400 ppm in the ground, which is about 20 times less as any other property that you will see. And the concentrate product, the monazite concentrate, is also 20 times less radioactive than your normal mineral sands concentrate. So really very high.
John, we'll move next question. So got to keep moving in this knock 'em out contest. John Zadkovich from Kingsley in London. Do you have a question for Elbert?
Thank you, Richard. Elbert, thank you for your presentation. One small question. Neodymium and rare earths in general, very topical, and are going to be that case for some time given the energy transition. Looking further ahead, how are you placed with respect to offtake? I appreciate it's early stages, but these things, it's always important to have some provisional discussions earlier than later. So keen if you could give us some colour as to where you are with respect to potential off-takers down the track?
Sure. Well, John, as you know, it all starts with meeting the right specs. So the technical specs, and towards those specs, we're guided by our cooperation with SSC, Saskatchewan, with a proven track record in cracking, separating, and also working towards the metallization of the product. I'm in talks with people all along the value chain. I have actually co-established the Global Rare Earth Industry Association, and as such, I know all the players personally, their procurement teams, the management boards, and those discussions are ongoing. What I try to do is to create an alternative value chain of stakeholders, and this is also the geopolitical diversification that the markets needs. Hope that answers your questions. That's supply, that's finance, that's the offtake.
That's right. Well answered there. Well answered, Elbert. You're going well. Dan Hill from Endeavour Financial in London. What is your burning question for Elbert?
Yeah, thanks, Richard. Yeah, great presentation, Elbert. Very intense, 3 minutes. Yeah, keen to understand a little bit more about the history of the project, why you acquired or discover how you came to discover the project, and why is Eureka something special, and then keen to kind of understand your timing and timeline to getting to a PEA and getting some economics on the project to understand it better.
Yeah, so the project was discovered in 2015 by an expert team focused on ESG principles in carbonatite deposits, knowing their ESG footprint. Then it was invested by a European fund related to the University of Camborne. Geologists, experts have developed it in the first stage with radiometrics, trenching, RC. And in that level, Numis Capital from Canada has taken it over in terms of an RTE, brought it to the stock exchange, and brought real money to the projects, on the back of which we have performed the last 2 drilling campaigns. We still have cash, as I said, but the exploration potential is bigger than that cash, and we're moving forward. So we're there, going to produce our MRE update, collecting that cash.
Excellent. Final question from Kingsley Jones of Jevons Global in Canberra.
Oh, thanks, Elbert. That's an excellent presentation. If I might just follow up, you mentioned that it's about 400 ppm thorium in a monazite. Just curious to know, it's probably too early, but do you have any idea where that's going to be processed? Because obviously in the past that thorium content has been an issue for some players. So I'm just curious as to how you're looking at that.
Yeah, so it's 400 ppm in the ground, which is in the mineral resource itself. We're working with SSC together to get towards a point that we can install a piloting plant. That piloting plant can theoretically be anywhere. SRG can help us with designing that plant according to the specs of our product. We target to do that in the southern African part. This could very well be in Walvis Bay, but of course that's to be seen. We have various options open at the moment, as well in Canada as around the world, but in terms of ESG footprint and in terms of adding value to the local economy, Namibia or Southern Africa would of course make sense.
Great answer, and some great questions from our panel there. They really dug nice and deep into that one. Well done, and Elbert, nice work.
Thank you very much.
Let's move on to our next presenter. Don't you go anywhere though, Elbert. We've got to have voting to go yet. Our next presenter comes from a little closer to my home. Is Andrew Sparke. He's chairman of Q Mines in sunny Queensland. Although it's been a bit wet up there lately. Andrew, you've got 3 minutes to pitch. I'll warn you when there's a minute left. Your time starts now.
Fantastic. Thanks for having me, Richard, and the panel. It's great to be here. Look, we're a little different. We're in a tier 1 jurisdiction. Everyone knows Australia well. We're in a state called Queensland, and we're a copper and gold exploration company moving to development. And you can see from the screen here, I've posed the cheeky question, is Q Mines Australia's best value copper stock? And I know it's cheeky, but I've done it for a reason. We're moving to development. Many of our peers are 300 to 600 million market cap. We're 28 to 30 million market cap. You know, we're very well valued. And I think when you get through the quality of these assets shortly, you'll get a sense of where I'm going. We're a copper and gold play. We're in Queensland. We're right on the coast. Okay, lots of infrastructure. This is a former producing high-grade copper and gold mine, and we've got boatloads of exploration upside. Okay, We've got infrastructure in spades. We're just down the road from the 4th largest port in the world by metals throughput. We're just out of the regional town of Rockhampton. There's 8 flights in and out of town today. Rail, everything we need to build Australia's next copper and gold development business. Since we listed, we're actually only a new business. We listed in May of last year, and in under 9 months, we've already delivered 2 resource updates. We're doing it. We're not just talking about it, we're doing it. And we've got a 3rd resource update planned this quarter. We're drilling 30,000 metres of drilling this year. Yes, you heard it right. That's 30 kilometres of drilling. We're going to provide our shareholders with lots of leverage to exploration success. And we're starting to transition into development. We've just bought 5 rural properties around the mine site. We're starting with the end in mind, and things are going well. As you can see on the slide 5 here, we've got exploration in spades, exploration potential in spades. All our resource, we've got about just under 600,000 ounces gold, or about 101,000 tonnes that contain copper. All of the Mount Chalmers mine, it's still open. Not only open in one direction, it's open in all directions. Okay, we've got 2 rigs on site.
1 minute left. 1 minute. Thanks,
Richard. We've got 3 exploration targets, and as you can see, we've got 4 very, very large copper and gold soil anomalies. This is a VHMS deposit. They're known for clustering. They're known for having multiple deposits in a cluster, and we're seeing that here in spades. As you can see on this page, this is a shallow, high-grade deposit. It's not uncommon to see, 40 to 60 metre mining widths. It's outcropping its surface. As I said, it's close to the coast. It's got some grade. We've just done some mets. They're fantastic. 97% recoveries in the copper, 87% in the gold, 80% in the measured and indicated category. This is going to get there, guys. So that's a really quick overview on Q Mines. And as I said, pose the question again: is Q Mines Australia's best value copper development story? Thanks for having me.
Well done. Very good work, Andrew. And now to our judges. First up, let's have a hometown or home country question from Kingsley Jones, Chief Executive and Chief Investment Officer of Jevons Global. What would you like to know more about Q Mines?
2 things quickly, Andrew. With restarting in old mining districts, I think it'd be helpful just to know why Mount Chalmers, was stopped producing, because you can see the watered pits there. And the second one's really on your ESG dimension. How are you looking to cope with that?
Yeah, great questions. Okay, so look, like everything, this particular mine stopped not because of commodity price. Actually, the ore was transported down to another VMS deposit locally called Mount Morgans, which is also, funnily enough, Mount Chalmers and Mount Morgans are 2 of the highest grade and largest VMS deposits globally. And so the reason this particular mine shut down in 1982 was because the Mount Morgans mine came to the end of its life. So very simple way to answer that one. In terms of our ESG, credentials, I think we're really we're really leading this space. Okay, we're one of only 3 ASX listed resources companies that's certified carbon neutral under the federal government's government-backed climate active certification. We're just installing our 3rd solar system on site. We're using renewable fuels for our drilling and diesel usage. We've got 90% rainwater, and we're using pit water for our drilling, and we're procuring goods and services locally. We're not just talking about it, we're doing it, and we're really leading the charge in this space.
Excellent question, well answered. John Zadkovich from King's Seed in London. Your question for Andrew.
Andrew, thank you for the presentation. I enjoyed that. 2 quick questions. One, how much skin in the game does management have? And touching on your renewables element, there's obviously a lot of appetite now in Australia for policymakers to endorse renewables and ESG related projects, Queensland being synonymous with coal. I'm keen to understand how much support you're receiving from the government as well, from the policymakers. And with a federal election just around the corner, I'm expecting there might be a lot.
Yeah, thanks for your question, John. The first one's quite easy. We've got a lot of ownership in this business, and that's why we've got a track record of delivering business plans quickly. I'm the largest shareholder. I've got about 35% of the business. Our management team and board have about 43% of the business. We've got a lot of skin in the game. I've put my own money into this, as I have done with all the deals that I've been involved in over many years. The second question is a little more difficult, to be candid. We are engaging with the state government here. They're very proactive. You know, there's everything from, you know, cheap debt capital to fund things through to, you know, media opportunities and whatnot. We're starting that engagement at the moment. To be honest, we're really focused on getting this third resource update out the door in under 12 months from listings. That's been our real focus at the moment, and that'll be out this quarter. So we haven't got a whole lot to talk to on that front. Being candid, we're really trying to focus on growing this resource first and foremost.
Good question, good answer. Dan Hill from Endeavour Financial in London. Do you have a question?
Yeah, cheers. Yeah, thanks, Andrew. You mentioned that you're on your third resource update to come out later this year. What's your target for that, and how large is this resource going to get before you start putting studies on the project?
Very good question. I'll answer it in a slightly different way so I don't take anyone behind the wall. Our goal of the business is to get to about 200,000 tonnes of contained copper this year. Okay, we believe that's mid-tier scale potential. And so this will be a mid-size, high-grade, you know, development opportunity at face value, with a whole lot more exploration upside. That equates to about 1.1 million ounces gold equivalent, to give you a sense of scale. We don't think it's going to stop there. We want to get there quickly so we can lower our cost of capital, so we can transition into production and you know, continue to explore out of cash flow, not out of equity. If that makes sense.
Excellent, well done. Per Wimmer from Wimmer Family Office, a question.
Yeah, what is the estimate or guesstimate for the total capex, and when do you anticipate to do your BFS, DFS, and/or go into construction?
Very good question, Per. Okay, so we're looking at starting our feasibility study this year. We've largely de-risked that resource growth with 3 additional deposits outside the resource, which aren't currently in that resource, and so we only have to do a small number of drill holes to convert that into the JORC 2012 code. So in terms of, you know, timeframes, we'd like to build that scale throughout this quarter and next, but transition into development before the year's out, with the plan to kick off or to finalise our feasibility study in the first or second quarter next year. So we're really moving quickly. As I said, we're only at 9 to 10 months a listed company, and we've got quite a strong track record as a management team of executing business plans quickly. And I will say we're already working on a number of these initiatives now. We've already got our preliminary METs. We're buying up the land. We're working on our community relations and all sorts of things. So we're working on a lot of these long lead items now, so that we can really fast track that development, that transition into development.
Kate Southwell from Parlour Investments in Zurich. Do you have a question for Andrew?
I do. Thank you, Richard. Thanks, Andrew, for the presentation. Can you tell us a little bit more about your market cap at the moment? And do you have any debt or streams on or royalties on the property at the moment? Just looking at the capital structure, how you're planning on raising the funds for the PFS. Thanks.
Yeah, thanks, Kate. We've got about 110 million shares on issue today. We're very tightly held. All our projects are 100% owned. We don't have any royalties. We don't have any debt. We've got a very, very clean capital structure, and that's something that I've, you know, really insist on when developing businesses. You know, we've got about 5.5 million in cash at the end of the quarter last year. We're about to actually publish our first quarter cash numbers shortly, so I won't say too much about that. But we're well funded at this stage. We're drilling like mad to grow that resource. But in terms of how we fund it going forward, we've had a lot of inbound, you know, institutional interest in what we're doing, from a strategic level to funds to high net worths. You know, you can start to see at the moment, I've got a number of institutions nibbling. This ESG strategy we've been rolling out is really, you know, resource leading, and we're starting to get some interest from some large ESG funds who are buying our stock at the moment. So well funded at this stage. Obviously, we will need some more capital to complete that feasibility study, but at this stage, we seem to be attracting the right sort of interest from the right sort of parties.
Wow, very good presentation and very good questioning. Nice work, panel. Nice work, Andrew. Well, 2 great pictures, a virtual mill up for grabs. 1 million would certainly pay for a decent drill program. Our panel of judges are mulling it over. I can hear those brain cells doing the maths. An NPV here, a copper price there. So let's hear from them. Can I start with you, Kate Southwell from Parla? Who got your money, how much, and why?
Well, thank you. I mean, two great projects, two very, very different projects. I like the focus of both on the ESG element. For me, I think we're investing 1 million each at this point, so we'll be generous. And I have to say, I think Elbert's going to win my 1 million today. Great project, Andrew, but it's a little bit early stage for me, and I'm concerned about the environmental liabilities that you've taken on, as well as your ability to raise that funding. I think it's going to be a bit of a high capex bill down the line. Rare earths, I think, well positioned, great jurisdiction, and the EU policy is all there to support, you know, that European Green Deal and supply chain of the rare earths market. So I think on balance, I'll go with the Namibian project. Thank you very much.
Kate, there's a great question you asked about streaming and funding. Was that, did you take that into consideration when you were making your decision?
Yeah, I mean, it's always good to see that management haven't given up too much too early on. You know, stream financing is obviously something that comes and goes in fashion, but it's good as a potential equity or debt holder to see that you guys, as you say, are keeping your cards close to your chest, and it'd be interesting to see what happens when the PFS comes out. But thanks.
Thanks. Thank you very much for that. Kingsley Jones of Jevons Global in Canberra. What did you think? Are you going to go for the home team or the away team?
Great way to put it. Well, look, let me run through both of them. You know, I think the rare earth project with Elbert, it's certainly very interesting. Monazite and carbonatite with gravity concentration looks good. I think it's great that it's got a low thorium content. That's very important. It's still obviously pretty early in terms of drilling that out, and also obviously pretty early in terms of offtake and other downstream activities. You know, for Andrew's project, I like this one in as much as you know, it is a restart of a formerly high-grade producing area with VMS, and that is always attractive in terms of the potential for follow-on drilling success. It is, you know, obviously at an early stage. I like the fact that management's well incentivized and has significant skin in the game. There will be capex challenges with a project like this. But I would acknowledge that in Australia, we are getting a much clearer focus from both state and federal government on project support. So with that, what I might say here is that it's a very, very difficult decision for me to make because I like both sectors. I think both copper and rare earths are very important to the energy transition. But I'm going to lean towards Andrew's project with 1 million. And I want to explain the reasons why. They're partly affected by my concerns about what's likely to happen in rare earths as we build the front of chain projects, as we're seeing now with these monazite announcements, like Loois has just gone to fund a major separation plant of mineral sands that are monazite rich. And my concern here is that we may be playing catch up on the downstream side in respect of an ex-China supply chain. So until we see those magnet production really coming into play, I have just a few concerns about whether the offtake will get filled. That's my concern. I don't know. I could be wrong. But for that reason, I'm putting the 1 million into Andrew's project.
Good idea. That's well, one vote each way now per Wimmer from Wimmer Family Office. How did you go? Where did your money go?
Two excellent projects, two great presentations. On the rare earth side of things, really like the fact, I mean, rare earths are going to be important in the future, and Namibia is a great jurisdiction. It is a bit early stage, really too early stage for us, but nevertheless, it has legs, it has promise. On the upper side of things, that's probably closer to our normal focus in terms of getting close to production. We love base metals in general. Restart of an old project, so there's a lot of history there that can be checked out, and a lot of skin in the game in a jurisdiction that is well known for mining. So I think net two great projects. How do I spread the $1 million? Probably 100,000 to Namibia on the rare earths, just because they're not as capital intensive and they are earlier stage. And then 900,000 goes to the copper project in Australia. Wish them all the best of luck. They're going to need the money. It's a big capex ahead of it.
That's very, very good. Thank you. What great description there too, Per. Thank you very much for that. John Zadkovich from King Seed in London. How did your money get split?
Thank you. Two great projects, and to echo the other judges' sentiments, quite different, but both exciting nonetheless. Much like Per, I'm also, attracted to the rare earth side. I think the trio percentages are very impressive, and also jurisdictionally, I'm a big fan of emerging markets, in particular Africa. So on that side, I warm to it. Andrew's project, I'm an Australian, so there's automatically a bias there. I'm also a big gold and copper supporter. So that also, sways my take on matters. And being brownfield as well, much like the other judges have commented, yes, there's going to be some capex challenges, but it's conceivably going to be a faster route to production. So taking that all in, and a myriad of very poorly written hand notes I'm trying to digest as I'm speaking, I'm going to also follow in Per's footsteps and split. I'm going to give 250,000 to Elbert, because I do like its early stage, but good jurisdiction, good commodity, good potential upside. And the balance I'm going to give to Andrew. I just think that's a safer proposition.
There. Now, gee, this is, I think we may have had a decision already, but let's go to Dan Hill from Endeavour Financial in London. Who got your chocolates and why?
Thanks, Richard. So I'm going to invest my whole $1 million into Andrew and Q Mines. I think an attractive project. I like the fact it's a restart near good infrastructure, accessible to the market. Obviously, a lot of catalysts and milestones coming forward, which should improve the share price. And gold and copper is very financeable. Rare earths a little bit more difficult, and they may be a little bit more difficult too. So, yeah, my money is with Q Mines, but well done, Andrew and Elbert.
That's a wrap. That's thank you so much to our judges there. I'm afraid I've got to declare Andrew Sparke the winner there, and collecting a not quite the 5 mil, but three just a bit over 3.5 mil, and 1.5 to Elbert. Yep, I'm sorry, Elbert, the Aussies got there. So, but thank you so much to both you and Andrew for your presentations today, and fighting it out in the pitch battle here. A big Minds and Money thank you also to our international judging panel: Per Wimmer, Chief Executive Officer of Wimmer Family Office; John Zadkovich, Chief Executive Officer of Kingsley, based in London; Kate Southwell, thanks Kate, she's General Counsel of Parler Investments in Zurich; Daniel Hill, Vice President Endeavour Financial, also in London. Thank you for joining our panel today. And of course, Kingsley Jones of Jevons Global in Canberra. Thank you to our panel. Thank you to our presenters. Thank you very much to all the people in the background and Minds and Money. And of course, a big Melbourne Mining Club. Thank you for everyone for joining us today. The winner by more than a nose, Andrew Sparke from Q Mines out of Queensland. Thank you.
Thanks, everyone.
Thanks, everyone. Congrats, Andrew.
Thanks, Elbert. Well done, mate. Great presentation. Well done.
Thanks a lot.
I'll be having a close look myself. It looks very interesting.
Yeah, thanks to everybody for their positive feedback on the project. Really appreciate the talk, and see you again.